Recording live from the Northeast Georgia Business RadioX studio. This is Northeast Georgia Business Radio. Welcome back, folks. Welcome back to another exciting edition of Northeast Georgia Business Radio. I'm your host, Tom Sheldon, and we're coming to you live from the beautiful Empower College and Career Center of Jackson County. I have with me another amazing guest. This guy's really cool, I'm telling you, and he knows what he's talking about. I'm building you up over there. Here comes the pressure. Ladies and gentlemen, I have with me Eric Scoggins, ETS Financial. Eric, welcome to the Northeast studio.
Thank you, Tom. Appreciate you having me today.
Awesome, man. How are you?
I'm outstanding, man.
Darn right.
It's a great day for a great day.
Every day's a good day. Yeah?
No doubt.
No doubt. Financial world. You're a money man. Retirement stuff.
Yes, absolutely.
How long have you been doing that?
1991.
1991.
I'm dating myself here now.
Wow. Now, if you were a young lady, I'd say she started when she was 4. I'm not going to say that, though, because we're both getting old.
Yeah.
That's all right.
That beats the alternative, too.
You know, the downside is, people bring flowers to you once a year, if you're lucky.
Yep.
Right? Now, you're president and founder of ETS Financial.
That is correct.
ETS have anything to do, perhaps, with your name?
It does.
Man, I'm good.
Very intuitive.
I'm hitting on all 8, baby.
You
I'll
are.
tell you what. What got you into this, man? What got you into the financial side of what you do? You woke up, bumped your head, lost a bet. I've been there. I know about that.
You know, back in the day, the early 90s, I just had no direction. I had a girlfriend at the time whose father was working for Prudential, and said, "Hey, Eric,
some influence.
You do good here, man. You got a great work ethic, and Prudential's a good company." And I said, you know what? I appreciate the opportunity, but young and dumb. And I said, I'm just gonna pave my own way.
Yeah.
So I went a different direction. Well, the different direction I went, every sign from God was saying, Eric, you shouldn't be going this direction, to the point where my paycheck started bouncing.
Oh, wow.
And I said,
hard times.
Maybe that Prudential opportunity, I should consider that. I don't think Prudential's going to bounce a check.
They shouldn't.
So
then we're really in trouble.
So he's one of my I call him my spiritual fathers. He was a mentor of mine and still is to this day.
That's awesome.
In his 80s. And he opened the door for me, and the rest is history. That's how I got my start.
So when did you go out on your own, more or less?
1997.
Pretty quick.
Yeah.
6 years, 6-ish.
I had a great time at Prudential, wonderful company, but just not the end-all, be-all. I mean, they have some great products and some great training, great way to cut your teeth.
Yeah.
As far as me being able to open up the toolbox and be able to offer other tools and strategies, it wasn't there. It was all Prudential. Kind of like what they call a captive agent at that time, or
Exactly.
a captive advisor.
Exactly.
So
Right.
I wanted to be able to kind of expand the toolbox and be able to do that. So I went out and got my CFP, Certified Financial Planners designation, and I went independent then.
Nice. Congratulations on that. Almost 27 years ago now?
It's been a minute.
Wow. I hear you, brother. I wouldn't like being put in a box with one of the bigger cats in the industry, and they do. Here's the box, fill it.
It's just not really in the best interest of the clients. When you're forced and it comes down from above and saying, okay, we got to get X amount of this off the shelf, or you can only offer X or Y. Right. And because the industry, there's other tools and strategies out there that would be better suited for any particular client. It's not the right field.
So is that what really separates what you're doing with ETS? Is that really what separates you from several others?
Yeah, I would
just
say
the options.
That is the big one. When you're working with these big banks and brokerages out there, you're working with the clients, but you're working for the firm.
Right.
Right.
So
as an independent certified financial planner and registered investment advisor, we work with and for the client. The client basically is who we are working for and who we want to see succeed.
What's the ideal client for you? Are you after someone about to retire, looking at it?
Yeah.
How far out, maybe, when they really need to look at it?
Yeah, that's a good question. That's another differentiator from us, because we focus entirely on retirement income planning.
Entirely.
Yeah, I would say 90%, unless we're taking care of a client family member.
Well, yeah, that's a little different. You can't say no to that.
Need some help, but as far as ideal clients, 55 plus, either retired now or 5 to 6, 7 years out from retirement. So, and that's really a big differentiator, because there's really 2 types of advisors that are out there. You got those that focus on what we call the accumulation phase of one's life,
Right.
helping to build that nest egg,
Right.
And then you got those like us that focus on entirely the distribution phase. And it's an entirely separate skill set and discipline when you're focused on
I can
that.
imagine.
You know, with the accumulation, obviously you're looking to grow. When it comes to distribution, now the focus is, all right, preservation, creating income for life, avoiding large losses from not only market situations, but also taxes and planning for long-term care and all those other items that come into play.
I imagine you have a lot smaller margin for error. If you make an oops and you make maybe a bad investment, you don't have the time to recover from
Oh, 100%. Yeah, 100%.
that. A lot less margin.
Yeah. So you don't have time to make up for big losses, especially in the market.
Especially in the market.
Right.
A 30-year-old may have 20 years to recover.
Yeah.
55-year-old may have 5.
Yeah. And you may have heard in your lifetime, brokers, big banks and brokerages, they'll say, when it comes to the market, talking about specifically the market,
right.
They say, hey, losses in the market, it's not a big deal, right? Markets go up, markets go down. It's just a paper loss, right? Mm-hmm. And besides, you're in it for the long haul.
Until you're not.
You might have heard that before, right?
Oh, yeah, all the time.
That's sage advice for that 40-year-old who's got another 25 years of plowing money in the stock market. But for our client family members, that's that's the most dangerous advice that they could heed.
Oh, it's horrible advice for them. Yeah. Losing money is one thing, but when you lose time, my friend, you cannot get the time back.
That's your most valuable asset.
Yeah.
Not your money, but your time.
Yeah. You can make money all day long. Good luck making time.
Exactly.
Good luck with that. Hey, and if you find out, you better tell me first. I'm just saying.
You'll be on that list. You might not be first, but you'll be on that list.
So I'll go with second or third, fourth. So you work with a lot of retirees or people looking to retire. What is that ideal age? It probably isn't. Every situation is probably different. Sure. 50, 55. You start hitting the 50, you really need to start looking at something.
Yeah, it's definitely situational. I mean, one of our largest clients, they're in their 50s. They sold a business. It's different, right? Mm-hmm. But for most people, it's always going to be the longer the wait, the steeper the climb.
Oh, gosh, yeah.
Right? So, But, in our ideal client world, people who typically come to our educational workshops that we teach, they're 55 plus.
Tell me more about these educational workshops. I didn't know about this.
Nelson Mandela once said that education is the most powerful weapon that you can use to change the world.
Oh, it is. It is.
And so,
if people are willing to be educated.
Yeah, and we hold monthly educational workshops around the community. We'll hold some dinner workshops like at Cotton Calf down the street in downtown Brownston. Provide a nice meal.
How did I not know about this?
Are you 55?
Almost.
Okay, you hadn't got a mailer yet, I guess.
I see it in the on the horizon.
So once a month we'll do workshops. Sometimes they'll be in like the Brownston, the activity center over there. Flowery Branch. We'll do some over there at the Mulberry Center. So a lot of the activity centers. We got this new library coming up here in Brazelton, so I can foresee us doing some there.
No, you're located in Houston.
That's correct.
The city of.
You got it.
City Square.
Right there where the water tower is, right next door. If you're familiar with where Cozy's and Sliced Pizza is,
that Peter guy.
There.
Yeah, he's awesome.
Yeah, he's something else.
So you are right there in town.
Yes, sir.
You've been in Jackson County as long as I have. I think we both came up here in the late '90s.
Right, 1991.
We're almost grandfathered in, Eric. Almost.
Before they started trying to turn it into Gwinnett County.
I'm not going down that road. I got friends on every side of that. I got friends standing in the middle of it. I love this place regardless of what they do or don't do to it.
Well, I love it. It's just, when you moved out here in 1991, we had a lot of cows, we had a lot of pastures, and now we got a lot of homes.
A lot of cars.
A lot of cars, a lot of homes. Cars. So it's not the way it used to be.
Oh, yeah. Not to tell myself, but I used to get on 85 at Dry Pond. And I wouldn't see a car till I got to Chateau Alon, honestly.
Imagine that.
And there were times when the tongue on the old Ranger was just hanging out because, man, you didn't take your foot off the gas till you got down to Brazelton. That's just the way it was.
Yep.
30 years ago, 25 years ago.
We came out here same time, 1991. All we had there at 53 was that Waffle House and those gas stations.
Pretty much, yeah.
That was it.
Yeah. They hadn't moved the truck stop yet.
Yep.
They were getting leaned on to move it. Now they're getting leaned on to move it again. But
exactly.
We got off topic. I'm sorry.
That's okay.
I'm sorry. Hey, two guys just hanging out having some fun. We both have similar war stories and scars. And I'm going to put you on the spot, man. what is the environment? What is the temperature in the room? Where is the business / economic cycle at, if we can call it that? I guess we can call it anything.
Yeah.
The American economy is blank.
Yeah. Conflicted.
Good word. Very good word. I wasn't expecting that. That's a good word.
There is a lot of conflicting signals out there. You cannot time the market,
Right.
but you can time the economy.
True.
Business cycles, they've been there since business began, right? We go through expansions, we go through, we peak out, and then we go through, recessions, and then we go through the trough, and then we come back up maybe through a recovery, and then another expansion or a new bull market phase, right?
Right. Yeah.
So right now, most people know the technical definition of a recession, right? It used to be,
Yeah, that definition's been changed, I think.
Well, there's a number of
convenience.
definitions that can't, things that can't be defined anymore from the government's perspective,
yeah,
and we won't go down that road.
Yeah, that's a whole different podcast, my friend.
Exactly. There's 10 leading economic indicators, okay,
Right.
that determine the overall health and strength of the U.S. economy. Those 10 leading economic indicators have been in recession territory since last June.
Yeah, year and a half.
Since last June, okay?
Yeah.
And they're still in recession territory now. Right? On average, you have bull markets last on average 8-9 years, right? We just came through the longest one on record for 13 years because the Fed was very accommodative with free money. And then you go through bear market recessions, right? That on average last about 18 months or so. So we're not out of the woods yet.
No.
Okay.
We should be on the backside, though, wouldn't you say?
I would say we're coming through. We're getting close to that trough. They're this has probably been the most widely telegraphed recession that we've ever seen.
By far, yeah.
And NEBR is actually the organization that calls the recessions, and that hasn't been called. Now they're saying, okay, now it's going to be 2024. My opinion, we've been in a recession. We're in a recession now. So when we see 30 to 40% of those leading economic indicators begin to move positive out of recession territory, and you can always have a false positive, but that's typically when we are giving us kind of a signal that we are moving out of that recession and moving into a new bull market phase, because economy is starting to hit on all cylinders or more cylinders, if you would. Right now, the only cylinder that's really positive in as far as the economic indicators is a leading economic indicator, which is the stock market. Right? Stock market is always forward-looking. Well, you got to be careful with the stock market these days.
Oh,
right?
Yeah. Oh, yeah.
Right? The stock market's up double-digit returns, but a lot of people don't realize that 85% of the performance of the S&P 500 this year comes from only 7 companies.
A small sample size.
Yeah, it's just those gigantic tech stocks.
It's basically one sector.
You got it.
Yeah.
So some are calling that an AI boom. Some are calling it an AI bubble. So
I like boom. I'm personally going to go with boom.
yeah, it sounds better, right?
Well, and it could be better for the portfolio too. Trust me on that.
So I guess the main point there is in this season, since we know we're not out of the woods yet, we've been here before. We will probably see another big pullback in the market at some point before we start moving back into that new bull market season. It's being cautious. Don't overexpose yourself to risk.
Right.
Use hedges on the portfolio to protect the downside.
When you say hedges, can we dive into that?
Yeah.
How deep can we dive?
We don't have to dive too deep. In our firm, we use institutional money managers. Right?
I have no idea what that means.
So think about it. An institutional money manager versus a retail money manager. Retail money manager is going to be like your gigantic, fine firms like your Fidelities, your T. Rowe Prices, your Vanguards, right? Your retail money managers, right? Well, your institutional money managers, these firms are gigantic firms managing huge pension plans and gigantic endowment funds. It used to be for us, Main Street Americans, to have access to that caliber of money management. You'd have to have multiple 7 figures to access that kind of caliber of management, right? Those money managers not only focus on growing the portfolio, they've got an eye on growing it, but they've also got an eye on protecting the downside. Okay,
Right.
what we call in our firm having a loss mitigation plan to protect the downside. So not if, but when we go through that next multi-year bear market, you don't just bleed out like everybody did
Right.
in '07 to '09.
Right.
Okay, so that's the big difference between a retail money manager and an institutional money manager. A retail money manager is never going to take your account to safety. They're not going to move it to treasuries when danger's out there. Okay, to protect it, because they believe, look, the institutional money managers say, look, if we can avoid losing big, over time we're going to wind up winning.
Again, there's that time thing, though.
You got it.
And that's great for a 30-year-old. It's funny, though, a lot of 30-year-olds don't invest money, though.
Right. Especially these days.
The catch-22 on that. Well, at 30, you're living forever, man.
Right.
And you'll always pull down the big salary. And
Bulletproof.
Yeah. My father never gave me a whole lot of pearls of wisdom. Honestly, he never did. But he told me straight out, and he was serious, don't get old, don't get sick. So if I can, I'm like, thanks, Dad. If I can whoop those, I'm good to go, right?
Yeah, that sounds like my, I always say tongue in cheek, the Scoggins Big Three.
The big three.
The Big Three?
Yeah.
Houses, spouses, and automobiles. Pray for guidance, acquire quality, and keep them.
And keep them.
Because those who change out those houses, spouses, and automobiles every couple of years, they don't get very far financially, do they, Tom?
They don't, and I do not fall into that category, thank goodness. But I know many who have.
Oh, yeah.
All right, where are we at, man? We've talked about a little bit about the market. Be careful with the equities in this kind of market.
For sure.
Right? Do you think, and this is not a fair question, so you think the soft landing is, I've heard soft landing for 2 years.
Right.
Soft landing, soft landing, soft landing. A soft landing to me may not be to you.
Yeah.
That's media jargon.
Yeah, the Fed obviously has been pushing hard to tackle inflation.
Oh,
right? They've done a lot of
have
aggressive
they ever.
increasing of rates. In our opinion, they're done. I mean, they're done raising rates. Okay,
You don't think we'll get another one in the spring?
Powell just recently came out and said, "Hey, not too fast," because Wall Street again always tries to get ahead and look forward. They're already talking about cuts.
Oh,
right?
yeah.
Talking about cuts. He's paring that down and say, "Hey, we're not saying more is not on the table, but the high rates that we have right now, they're not going to be cutting anytime soon."
Right.
I think the Fed has learned the lessons from the Volcker era. Back in the 70s.
I hear that name a lot.
If you go back and you put a mountain chart to our inflation trajectory for where it was and where it went to where it's 9 and now where it is now, you almost identically you can lay it over. It was the same thing in the Volcker era, and they did the same thing. They hiked very, very aggressively to combat inflation. It came down significantly like ours is now, but they started cutting too quickly.
Cutting too quick.
And then we had a resurgence.
You got to let it ride. You got to let it ride for a little while.
So we're gonna have high rates for a longer period of time. But the good thing about that, right? Probably the best thing about inflation is we got really high interest rates on short-term things. We get 5+% now on a money market account.
Right.
Completely liquid. Right. No risk.
Treasury bonds, bills.
Yep.
T-bills are very attractive compared
Absolutely.
to 2-3 years ago.
I mean, you don't even have to lock it up in the CD these days. Just a high-yield money market account at your local brokerage account, right? And until we see, kind of our firm, until we see that either the Fed does start cutting and we start losing some of that yield on those no-risk instruments, and when we see those leading economic indicators starting to turn positive again, obviously that's the time for some new strategies.
So do you think in general, and we're generalizing, there's a lot of cash on hand just waiting?
Oh, yeah.
Worldwide, U.S.,
Absolutely.
nationwide, whatever.
Absolutely.
A lot of cash on hand just sitting and waiting.
Yep.
So we're going to get to that rip-your-face-off bull market that we're all just salivating for.
We'll get one. Only time will tell when.
Oh,
right?
yeah.
But again, as those leading economic indicators, that's kind of our GPS. Kind of gives us an idea of where we're going to say, okay, if you go back to 07 to 09, right? We called it the Great Recession.
It was.
Horrible time in our economy and in the world, for that matter. If you go to that very bottom, that V of March of 09,
right?
You drew a circle around that. When about 30 to 60% of those leading economic indicators turned positive, that's when we started seeing that new bull market season.
And it was a V, right?
Investing is not hard. It really isn't. People make it really complicated. A lot of advisors make it complicated.
Oh, yeah.
There's only 2 seasons. There's bull markets.
That's true.
And there's bear markets. Right?
That's true.
You just need to know what season you're in to know what tools to be utilizing to make the most of that season that you're in.
What value can you give all of our listeners, all of our downloaders?
Honestly, I think for your audience, one of the things that we do in our educational workshops is we always will offer a complimentary consultation, right? And I just call that a very, very relaxed and comfortable get to know you meeting, okay? And it's an opportunity for us to get to know folks, to find out, if there's anything we can do to help them, to improve their financial situation. I'd encourage them to call in the office, 770-904-1978, and just schedule that complimentary consultation and to see if there's anything we can do to help you. If you don't have a plan, you need a plan. When we talk about a plan in our realm, the retirement world, it's not just investments, right? It's making sure that you've got enough income to have that peace of mind for that happy and worry-free retirement, not to just get to retirement, but through retirement. Also making sure you're protecting the downside, right? Having a loss mitigation for your market-based tools. Coordinating your Social Security with your other investments to make sure that you're maximizing your Social Security and pension plans as well. Making sure you've got some leverage for long-term care. We talk about long-term care. Nobody likes to talk about it. But Tom, I can tell you right now, there's not too many things out there that can completely decimate a lifetime of diligent savings and investing in a long-term care situation. And then the final component when we talk about creating that comprehensive plan is creating, as much as possible, a tax-efficient retirement income plan. Because with all this monopoly money that's being printed in Washington these days and past number of years, there's a tremendous amount of legislative risk for much, much higher taxes down the road. So when we talk about comprehensive and holistic, it's that entire plan that addresses all 5 of those critical areas of a successful retirement.
You got a website?
We do.
Awesome.
It's etsfinancial.com.
etsfinancial.com.
I'll leave you with this. Just as important as it is to get a second opinion on your health, it's just as important to get a second opinion on your wealth. I'm here to just share with you, it's not possible to get an objective second opinion from the person who gave you the first opinion.
There's a lot of wisdom in that, folks. Well done, sir.
So come on in, and actually for anybody who decides to come on in for that complimentary consultation, call the office. Like I said, it's just a very relaxed and comfortable get-to-know-you meeting. We've authored a book called Retire Strong, Your Guide to a Happy and Worry-Free Retirement. We will actually give you a complimentary copy of that book. If you come in, we will actually sign it for you.
Nice.
So if you hang on to it long enough and outlive us, it might be worth something someday.
It's going to be worth like $20 on eBay.
Yeah, like poor old Van Gogh, right?
Yeah.
His paintings were worthless till he died.
Till he died.
Bless his heart.
Then they were worth a lot more money.
Tom, one thing also that we talked about, one of the things that we're doing this year is we're going to do the ETS Financial Gives Back, where we're actually going to provide up to 6 months of rent or mortgage payments for someone who has fallen on hard times at risk of losing their home or being evicted. So we're going to do 2. Okay, so we've already chosen the first one. We're going to do a reveal on December the 21st. If your listeners know someone in their relational circle that falls in that category, they can go on to etsfinancialgivesback.com.
Nice.
etsfinancialgivesback.com, and either nominate someone or share that with the person, and they can go and complete an application, because I would really love to find someone in our backyard here that we can bless this year.
You're awesome, man.
Happy to
Very
help.
cool. What was the website for that again?
It's etsfinancialgivesback.com.
So it's a little different from the company website.
Right.
It's got Gives Back in it.
You got it.
Eric, thanks for coming in, brother.
Thanks for having me.
We've been trying to get together for a few weeks, couple months.
Couple hiccups.
Root canals and stuff.
Hip replacements.
And hip replacement. He came up here to the studio doing cartwheels. Like, dude, there's no way you had a hip replacement. But Eric, thank you, brother.
Hey, thanks for having me.
God bless you. Very welcome.
God bless America.
We'll definitely take that. Hey, folks, check Eric out. ETSFinancial.com, 770-904-1978. I'm Tom Sheldon. We'll talk to you soon. All matters discussed during this show are for informational purposes only. Each individual situation may vary, and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources, and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with an ETS Financial qualified representative prior to implementation. They are not affiliated with or endorsed by the Social Security Administration, Federal Medicare Program, or any other government agency. Calling their number will direct you to a licensed sales agent. Investment advisory services are offered by First Advisors National, LLC, a registered investment advisor in the state of Georgia. Insurance products and services are offered through ETS Financial Services, LLC. First Advisors National, LLC, and ETS Financial Services, LLC are affiliated companies.